with this list of potential trade deals out there, could it actually help the market, give us a boost that we need to break out? I want to bring in Gibbs Wealth Management President and CIO, Erin Gibbs. Listen, a deal with Japan, India, UK would be next year. But, these are things the administration talked about trying to achieve. And certainly it seems to me like they would alleviate any anxieties that people have that America's pulling away from the global economic system.
It's helpful, but obviously we know that India isn't exactly the most meaningful trade partner, and we already have a very strong relationship with Japan. So I don't know if Wall Street is going to really see any changes in expectations or estimates, because none of these are the real powerhouses like with China. So
Japan is what, the third largest economy in the world? Not having a stronger economic relationship wouldn't help?
Because we have, in general, the U.S. and Japan have always worked well together and very much. And though they're very large, they're not growing. And we know that they've been basically in flat to even to somewhat recessionary levels for the past 2 decades. So having it's helpful to have a good partnership, but we know that they're not that growth area where you want, like with China.
Right. So, and by the way, China's not the growth juggernaut that it was either just a decade ago. I do want to ask about the China situation. On Friday, President Trump says, I want a complete deal. I don't want to piecemeal this thing. And then there's word that China, it's bolting. They're leaving in a huff. They're not going to visit farmers. And it turns out there was some misreporting there. Okay, I know the algorithms are set up to read headlines a certain way, but when do human traders and investors start, or should they start to at least take a pause on this kind of news, particularly when it comes out of the mainstream media? Because more often than not, there's more to the story.
Yeah, so on Friday, for most of Wall Street, though, you still see that we've been sort of just hovering at these levels. We haven't seen huge market moves where we're talking about 1% to 2%. So there might be some intraday where they're just trading off headlines, but you're not seeing huge volume and really big moves. And just, in certain sectors that have been hit. So I think as long as we don't see major announcements, I think today it's going to be tough with the negative news coming out of Germany. We're talking about 7-year lows on their manufacturing and services. Those are concerning headlines that we already knew that Europe was in bad
shape. Although we opened lower and we're moving higher right now. I do want to also ask you about the horn breaking off of the special unicorn, WeWork. Of course, this is before they even go public. Now, internal pressure is mounting to oust their CEO, Adam Neumann, before the IPO, which has been delayed. And I want to know, not only could this spell doom for their efforts to go public, but what does it say about this IPO market? 2019 was supposed to be like the greatest year ever for IPOs, because this time, not only we're going to raise a record amount of money, but it was going to be with real companies that would really take off, and the market would take off as a result.
Well, real companies implies companies that are making money, and that's clearly not the case for a lot of them. So, I think a lot of these investors, they've basically tapped the private equity markets long enough that they're being forced to go public because they need the cash, right? You don't go public because out of the goodness of your heart. You're going public because you want investors' money.
Are you concerned about that? Because I know in Wall Street, the whole thing is if you go IPO and you're up 50% the first day, you left money on the table. But are you concerned that this whole notion of sucking every nickel out of your customers and your name brand recognition can hurt? Because these are duds. These IPOs have been duds. And essentially, it's their customers who use these products and say, OK, I'm going to buy the IPO. They're losing money. Are you concerned at all about that?
We've seen this for decades.
But not like this, though, because this is something you knew. This is like, to your point, they raised money for 10 years, and it's the same names. They get on the ground floor. Look at the first round. It's the same people. It's the same entities, and they're making billions of dollars, and then they tell the public, OK, we got $1 trillion valuation. You want a piece of the action?
So certainly it's unusual that these companies are going to market so late. Generally, they become public much earlier because private equity wants them to go public earlier. So it is unusual that they get so big and come out with such big valuations. But when you look at the overall track record of what IPOs typically do, it's not like 2019 is that much different from like many of the other decades. 80% of IPO companies are lower.
I got to wrap, but you're not touching any of these, are you?
No, I'm not, absolutely not.
So Peloton, you'll watch from afar?
I'll watch afar. And WeWork, I wouldn't touch with a 10-foot pole.
All right. Thanks a lot, Erin. Appreciate it.